Welcome to our Crypto News in 10, a daily podcast bringing you the latest news about crypto in under 10 minutes. It's Friday, December 19th. Here's what's new in crypto today. A nationally chartered bank launches its own stablecoin. Wall Street's top exchange operator circles a crypto payments unicorn. Coinbase goes to court over prediction markets. The Federal Reserve loosens a key policy roadblock for bank crypto activity, and a new crypto-friendly bank wins FDIC approval. Let's break it down. Story 1. SoFi just entered the stablecoin arena with SoFi USD, a fully reserved dollar token issued by SoFi Bank, N.A. That makes SoFi the first national bank to put a stablecoin on a public permissionless blockchain. SoFi says SoFi USD is backed 1-to-1 in cash, with immediate redemption. The initial rollout focuses on institutional settlement rails. Faster money movement for banks, fintechs, and enterprise partners, before opening to SoFi members. They're framing this as infrastructure, not just a consumer coin. Partners can white-label issuance or use SoFi USD directly for 24/7 settlement at fractional cent costs. The debut coin was initially minted at $10,000, with a broader release coming soon. Markets liked it. SoFi shares popped on the announcement. Sources: SoFi's press release, The Block, and Barron's. Why this matters. Stablecoin rails are quickly becoming the connective tissue between traditional finance and crypto. With the U.S. Genius Act now in place, bank-grade issuers, alongside payments giants, are racing to power instant settlement in and out of crypto markets. Source: Barron's. Story 2. The parent company of the New York Stock Exchange, Intercontinental Exchange, is in talks to invest in MoonPay at roughly a $5 billion valuation, according to multiple reports citing Bloomberg. MoonPay runs one of the largest fiat-to-crypto on-ramps and has been expanding into stablecoin infrastructure and cards. For ICE, which already made a splash with a multi-billion commitment to Polymarket's event data business this fall, a MoonPay stake would lock down more of the plumbing that moves dollars onto blockchains. Another sign that market infrastructure heavyweights want to own the rails, not just trade the assets. Sources: Investing.com and the Associated Press. Quick angle check. If that deal closes, expect closer integrations between brokerage, data, tokenization, and payments. Exactly the stack that enables 24/7 asset flows and on-chain settlement. ICE's foray into prediction market data suggests they see event markets and crypto payments as complementary streams. Story 3. Coinbase filed lawsuits against Michigan, Illinois, and Connecticut, arguing that prediction markets are federally regulated commodities venues, squarely under the CFTC, not state gambling. This comes days after multiple states sent cease and desist letters to companies offering event contracts. Coinbase, which recently added prediction markets to its everything exchange strategy, says the state actions overreach. The legal fight matters because it could determine whether event contracts, on sports, macro prints, even election odds, are treated like derivatives instead of wagers, and whether on-chain markets can interoperate with U.S. brokerages at scale. Sources: Barron's and Investopedia. Practical takeaway: if courts or the CFTC bless broader event contract trading, flows between on-chain prediction markets and crypto brokerages could accelerate, potentially creating a new demand sink for dollar token rails and exchange liquidity. Before we continue, here's a message from our sponsors.
Need elite developers fast? Elite Coders connects you with rigorously vetted senior engineers in 24 to 48 hours. Staff augmentation, dedicated teams, or full project delivery, we've got you covered. Visit elitecoders.co to get started today.
All right, let's get back to it. Story 4. A significant policy reset from the Federal Reserve. On Wednesday, December 17th, the Fed withdrew a 2023 policy statement that had boxed in state-chartered banks, especially uninsured ones, on novel activities like crypto custody and dollar token issuance. The new statement acknowledges that different bank types can be permitted different activities if done safely and soundly, and it routes oversight back through the standard supervisory process, rather than special hurdles. Translation: the presumption of no is gone. There's now a clearer, neutral pathway to engage in crypto under normal bank supervision. Observers say this could reopen competition between state and national charters and lower friction for services like custody, tokenization, and stablecoin programs. Sources: Federal Reserve releases. Why you should care. Banks already power a lot of crypto's behind-the-scenes cash movement. With the Fed's shift, expect more banks to pilot custody, payments, and tokenized deposit experiments, particularly those aligned with the new federal stablecoin framework. That's fuel for real-world integrations, payroll, business-to-business settlement, and cross-border flows. Story 5. New crypto-friendly bank incoming. The FDIC just approved deposit insurance for Erebor Bank, a de novo national bank headquartered in Columbus, Ohio, targeting the innovation economy, including virtual currency market participants. It's not a free pass. The approval imposes stout conditions, like maintaining a minimum 12% Tier 1 leverage ratio during the first 3 years and honoring a capital call agreement if it ever dips below well-capitalized. The OCC had already granted preliminary conditional charter approval in October. With FDIC insurance now in hand, Erebor is a step closer to launch in 2026, pending remaining milestones. For crypto companies seeking stable U.S. banking partners, and for dollar token programs that need insured, supervised banking touchpoints, this is a notable win. Source: FDIC. Zooming out, these threads connect. A bank-issued stablecoin joins the field the same week the Fed removes a key policy roadblock. The top U.S. exchange operator explores a stake in the on-ramp that moves fiat into crypto. A crypto-focused bank secures insurance with strict guardrails, and a courtroom fight over prediction markets could define a new class of on-chain financial products. The through line: more institutional plumbing, clearer rules of the road, and more ways for dollars to move on-chain around the clock. That's today's wrap. SoFi's stablecoin launch, IC's potential MoonPay bet, Coinbase's state versus federal showdown on prediction markets, a friendlier Fed framework for bank crypto activity, and FDIC approval for Erebor Bank. Watch stablecoin and banking headlines into year-end. Those rails are quickly becoming the backbone of on-chain finance. Thanks for listening, and see you tomorrow.